Hello, everybody. Welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we're counting down to the next VRIC, January 21st and 22nd, 2024, at the Vancouver Convention Center. But for now, we're keeping interviews going every week with great guests. And today's guest is a prominent investor who also manages a family office and the founder of ChenPicks.com. It is Chen Lin. It's great to see you.
Thank you, Jess. Great to be here.
Yeah, happy to have you. So I want to start with you've called 2023 the year of conflict and inflation, and you've said that 2023 feels like 2008 all over again. So could you expand on that? Are we headed for a financial crisis as big or bigger than in 2008?
We already had a financial crisis bigger than 2008. If you look at the loan borrow from the Fed balance sheet, it's higher than 2008. I made a call around PDAC. So, and 1 week later, the Silicon Valley Bank went under. So there's a lot of people came to me and said, "Oh, Chen, you made the right call. Are we going to like a 2008 again?" Well, yes or no. Okay, there's some similarity, a lot of similarity with 2008. In 2008, a subprime, right, on the bank balance sheet, it collapsed. The bank went under. The same thing happened with right now is the government, U.S. government bond. Because in the United States, I don't know, in Canada, United States, when COVID hit, all the government, both administration, Trump and Biden, send a lot of money. So the money goes to the citizen, ordinary people. Some people never have such money. So put in the bank, then that kind of 0% interest rate. Jay Powell said we will never, he didn't say never ever. He said very, very, very slow raising interest rate. He promised, he made so many promises the interest rate rise will be slow. So the bank thought that, okay, this is free money. Why don't we just buy US government bond for 1% for the next 10, 20 years, right? So we made a very good return. The things changed. He raised interest rate highest in the sharpest in the US history. What happened was the 4 or 5% interest rate that the depositors, they take money, either they buy something or they put in some higher interest rate instrument. So the bank got hold with all these 1%, 2%, either government bond or MBS. So they're technically bankrupt. I just saw all these reports and there could be more to come. But different than 2008. Okay, there are major two differences. I'm trying to tell people. First is the government almost mandate now, no bank will fail. So basically, they will wipe out all the shareholder, they wipe out the bondholder, but depositors, even as small as Silicon Valley Bank it is, they already claim them they already, by this new law passed in the past couple of years, they already reduced that significant importance, but they still guarantee all the depositor. So it seems like every bank, they're going to back up. So they don't want to go through Lehman again. So all these liability will come to the government. That's the first difference. The second difference is that there's a massive amount of cash on the sideline. I'm going to have a presentation next week. Also, that's something I want to talk about. Difference between now and 2000, the setup is quite different. The cash balance sheet for the investors is highest as ever. So that's create another situation. So because all the cash, they can move around. Last quarter, we saw the move to big tech. Personally, I think big tech is overvalued, but it's just my opinion. But they can go elsewhere because it's a liquidity going back and forth. So I see there's possible for 2008 type of crash if the policy mistake still can happen. But I think the chance is low. I have money. I put some in that on sideline. I buy the 3 months, 6 months US government bond for 4.5%. So I know this money will come to available 3, 6, 12 months. Even I can do 12 months as a long-term capital gain, right? So in the United States, it's a lower tax. So I have those money on the side, but I'm also I'm investing. I think investors are not that stupid at 2008 because 2008, a lot of investors, including the gold and silver investor right now, they're waiting for 2000 dip, the crash of 2008. But when everybody's looking for it, it may not happen. We know on the other side, when this is over, gold and silver will go higher, much higher. Everybody agree. But I just don't agree on if we just go higher from here or go dip first and then go higher next. So nobody that's in debate, right? So I was fortunate. I was buying gold and silver in the past few months. I'm sitting on a very nice gain. So I'm just looking. I'm not chasing here, but I'm very happy with my investment. But I do want to invest. That's the difference between now and 2008. Oh, by the way, we did very well in 2008 as our family investment. And many accounts we didn't suffer much loss or any loss at all. Somehow even had some gain. So that's why I started writing the newsletter in 2009. So
Right.
I went through that period, so I can see the difference. So that's why I changed my portfolio so that I can can benefit this new situation of 2023.
Well, you mentioned precious metals there, and I've been buying precious metals as well. A lot of people watching this channel and fans of the VRIC have also been doing that. But I'm wondering what you think it's going to take for the average investor to start realizing and waking up to the fact that gold and silver is a good place to park their capital. You know, last year we saw bonds fall along with the stock market, which was quite unprecedented for a very long time within the history of the stock market. You mentioned you're putting some money in treasuries. I'm doing the same with T-bills in Canada because you get a 4.5% interest rate. But do you think there's going to come a time where your average investor is going to start allocating capital towards silver and gold as a potential safe haven asset?
That's a very good question. I think it's getting started. It takes a while, for people to realize, to see, gold is, you look at gold, the past it's boring. People say it's not, you don't even get killing on that. But on the other hand, the gold is a secure asset. It's going up over the time. It's been proven over and over again. So I think people will recognize gold and silver is the money. And as you see right now, their central bank of buying gold is at all-time high last year, all-time high. So they probably will buy more this year. So there is a tendency, people around the world start recognize gold is money. And if you really look at how much money we printed when United States get out of gold standards, gold will be much higher. So I'm not looking at the gold. We're going back to gold standard. Even you go back to some kind of semi-gold standard, right? You back like 10% of the money you print. That's gold. It would be much higher. So I think it just take people to recognize. It will be a slow process, but we are getting there.
So, what are your thoughts on the BRICS nations expanding their influence, starting to trade for energy outside of the US dollar? We even saw France and China do a deal for LNG in yuan. We saw Kenya and Saudi Arabia doing a deal for Kenyan shillings. We've seen Russia and China form an alliance and agree to start trading in rubles and yuan for energy. How do you think this is all going to play out? A lot of people are calling for, well, there's going to be a BRICS nations currency now, potentially backed by gold, and this is going to mean the end of the dollar. Other people are saying, well, the dollar is not going to die so easily. It's not going to relinquish its reserve currency status just like that. It's going to potentially take a lot longer than people think. So, what are your thoughts there, and maybe what do you think it means for gold?
Yes, I actually am more in the second camp. I think a dollar will be with us for a long time. I mean, like the trade between China and Russia, because they cannot use dollar. Dollar probably still preferred, even though we are running so much deficit. And I think it's a gradual process. It may take a few years, if not decades, to play out. You look at what happened to British pound, right? They were reserve currency, and then after the World War I, World War II, then they are finished. So United States, we have a Cold War. Maybe after new Cold War is finished, but so it may take a decades to come. So if you look at other currency, they're not very real alternative to US dollar if you want to do transaction. So I think gold, on the other hand, gold is the view more and more by central bank around the world as the most important asset out there. So they see how much gold you have, to see how stable your country is. And then everybody wants the gold to be back to their own country instead of put the gold in New York. So this is a trend, and then this is coming. So I think that it's not like done overnight, But I think it will come. It's a slow process, but it will come. And then you see a BRIC currency. I don't think so. You look at the BRIC nation, they're so far apart. They have all common interests. They have very few. I want to say they have some common interests, but mostly their own interests. One country want to invade the other. One country want to do some deal. So I seriously thought there will be a BRIC currency. Okay, but I see China has ambitions to make their yuan to be the second reserve currency. I think China is doing that. And I have a lot of friends ask me, Americans have a trade war with China. With China retaliate, what China will retaliate. We'll talk about that later. But will they ban Apple? I said, no. I don't think they will do that because China has a huge trade surplus with United States. So you fight that way in Chinese, it's not a good fight, right? So they want to fight somewhere else. The China is trying to hurt United States is China is taking money out of US government bond, and China is buying more gold. China has a broker deal with Iran and Saudi. And I heard rumor China going to export weapons to Saudi Arabia. So when Saudi Arabia got Chinese weapon, which is, I heard is very good, okay, it's highly competitive with United States, and then China has no limit. United States only limit what kind of weapon can be exported to Saudi Arabia. China don't have that, right? As soon as I heard one of the rumor I heard, as soon as United States are going to export the nuclear submarine to Australia, which China protests, and China will export nuclear submarine everywhere else. So it's like so China so eventually China want to push United States out from the Middle East, and then so those Middle East country also has a big gold deposit. They are gold loving history, and Dubai becoming the world financial hub, and then a lot of gold is going there. So I think all these development are positive to gold. It's ironically it's positive. It's hurting United States and China getting this new Cold War, and they're hurting each other, but it's good for gold.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Those are some great observations. Now, you gave a presentation at this year's VRIC about the implications of silver used in solar panels and how that could affect the supply-demand fundamentals of silver, leading to a very bullish setup. I know you've given this presentation at a few other conferences as well. Could you talk us through that thesis and update us on any new developments there?
Yeah, that's great because there's a lot of new development out there. I had discussion with Silver Institute, with Metal Focus Group. We have some back and forth discussion. They already, privately, they already made their estimate of last year was too low. Okay, they already upgraded once at the end of last year. Now they're going to upgrade again 2 weeks, 1.5 weeks from now. They're going to have a new update coming out. So it will go higher. So this year's will also very likely to go higher. And I there, because it's beginning of the year, I got some very well-known forecasts, those research report. They talking about they're in the solar panel industry. They look at how much solar panel demand is for this year. It's off the chart. It's off the chart. And then I happen to have, I think I'm going to share with you the recent podcast from CPM Group, which Silver Institute, they told me they were very similar. CPM Group and the Silver Institute have very similar forecast. So, and then because Silver Institute didn't tell me exactly what's their base of their forecast, but CPM Group, I really like Jeff, as he put all the number together. So he has his number. This is my base based on my forecast, and I can show you. It's good data. It's probably last year backward looking, but if we compare with this year's, the most credible research institution looking at it, it's way off. It's not way off. I'm talking about 2023 now. It's similar to their 2028 to 2030 forecast. It's way off. So I think for investors, if you believe this thesis, then most of the people who are talking on CNBC are wrong, and then we are right. So there will be a huge surge of silver demand on solar panel this year, starting this year. And then last year already highest deficit of silver on record. This year, solar panel, and I'm not talking about others. I know solar panel the demand was going to go through the roof, can easily add I would say 5 to 10% deficit just on solar panel itself. It will squeeze out all the other applications. And then next year will be even higher. So, so that's what I see, the very bullish case for silver just in the solar panel industry.
So how do you see the gold and silver mining stocks positioned at the moment? I've heard a lot of people say they look very undervalued. And I know you were speaking about at the top of the interview how you don't necessarily think there's going to be a big, broad market crash from here. It's kind of a wait and see situation. But in the case of a much bigger market crash, which some people are calling for, do you think gold and silver equities would sell off with the broader market, or do you think they would act in opposition to that move?
If we have exactly the same as 2008, margin calls, Lehman Brothers, financial market frozen, the gold will go down. Gold miner will go down. Okay, no question about that. After went through 2008, I see what we have. That's what I'm saying. The 2023, even I feel like 2008, I see the difference. So if there's a huge amount of money on the sideline, then there may not be such a crash. And there's so much liquidity when they come into gold, actually can push gold and gold miner to all-time high. Right now on the internet, on the Twitter, on all the message board, they say they're trying to squeeze JP Morgan on gold. I don't know if you saw that. It's all over the internet. I feel like the silver squeeze like 2 years ago. If really people really think, I'm not a conspiracyist. Okay, I don't believe in those theories. But if all the people buying gold believe they can bankrupt JP Morgan and buy gold, gold will have a spike. And then if you're sitting on the sideline, you will miss this. So I have dry powder, but I also invested. So I think that, and also historically, if you look at gold miner and gold ratio, it's still very, very low. Historically, it's very, very low. So, and then silver gold ratio still is very, very high. I mean, silver too cheap. Okay, so if you look at those, put those together, this is a great opportunity.
And so, aside from gold and silver, are there any other commodities or metals that you're either investing in or watching in that you're bullish on at the moment?
Right now, the metal I'm bullish is a little unknown metal called Tellurium. So what if you look at the historical chart, Tellurium right now is just at the all-time high, very similar to gold. Most commodity right now is way below all-time high. Why is that? Because it's used in First Solar solar panel. First Solar only use about 60% of worldwide Tellurium production. Their talk about this year will go more, soon they will take more than 100%. This even by International Energy Agency account, they think they will take more than 100% of worldwide production of Tellurium just by the First Solar. So, and then on the other hand, 60% of Tellurium is from China, 60%. So that's a very good setup. Because China looking for retaliation. This could be rare earths, those kind of rare metal could be an area of retaliate, right? So that I think that's the area I like, and I think I will take some positions and just see, because when it runs, it's very hard to chase. You want to take some position. Yeah.
Very interesting. Well, appreciate you joining us so much today. Thank you for sharing your knowledge with our audience. For those who want to learn more, can you tell us about chenpix.com and anywhere else you'd like to direct people online?
Oh yeah, chenpix.com is my website, and I write newsletter, basically tell my subscriber what I'm doing, what direction I'm looking, what area I'm invest mining, invest in energy, invest in biotech. I see all these three sectors are a very, very exciting year so far. So far, I have a great start of 2023 and looking forward to a very exciting year.
Great. Well, I'll put a link to chenpix.com in the description below so people can go check that out. Thank you so much for joining us. Are you going to be at the VRIC next year?
Yeah. That was a great conference
It
this year,
was.
and looking forward to.
Yeah, well, I'll see you at the next VRIC and also hope to talk to you before then.
Okay, great. Thank you.